All right, team. This is your host, Charles Becco, and today we are going dumpster diving for the worst stocks with the best potential. All right. And so let's be clear, we're not buying garbage. We're looking at stocks that we feel are maybe unfairly, undervalued. Okay. We're looking at stocks that Wall Street used to love, stocks with big narratives, stocks that had cult followings with huge upside dreams, but then the market kind of saw it, fizzled out, and then the market threw them all away. These stocks were once called the future of everything, but now they're beaten down, hated, and in some cases trading like it's already dead. But, sometimes the market overreacts. So let's take a look at what we're looking for, right? All right. All right. So the question is this: is Wall Street too negative? Okay. The purpose of this list is we want to see stocks that still have something, substantial to give back to the market. All right. So we're looking at stocks that have a real product, a real brand, a real customer base with a large market and a possible, path back. Again, we're using our Benjamin Graham lens to evaluate the fundamentals. We want to see, does the company make real money, have real assets? Is it drowning? Is the business even worth salvaging? And, what's the appropriate market margin for safety, right? And so, again, we're going from a 1 to a 4-star rating. So, we're going to be checking out a couple of things, right? What Wall Street expected, where the stocks peaked, what went wrong, what are critics saying, and what the fundamentals look like right now. And, hopefully what the stock needs to do to turn itself around. And so let's kind of dive right into it, all right? Sorry about the page there. Yeah. All right. All right, let's go to the first name on the list, and we are talking about Sunrun, right? Ooh, Sunrun. I know some of you guys know some of the Sunrunners, okay? So Sunrun does solar distributed energy, and we gave it a Graham score of 3 out of 4 stars, okay? Now, out of everything on this list, Sunrun is the cleanest, quote-unquote, dumpster dive, okay? Because, they're about a $4 billion company. They are the country's largest residential solar company by far. Wall Street once believed that rooftop solar would be the permanent American fixture. The idea was simple. Instead of just paying your utility every month, homeowners would produce their own power on their own roofs. And Sunrun is the leader of that, okay? Then, rates went up, financing became harder, consumers got tighter, then policy uncertainty came in, and the stock got crushed, Sunrun saw its high, kind of during the pandemic, and it really has not recovered since then, right? And so, critics say that, Sunrun is too dependent on financing, incentives, and household demand. That's a fair criticism, but solar is not simple. It combines a bunch of very complicated things. It's energy, and that's number one. It's construction. There's financing involved. And, there's the cost of customer acquisition. None of those things are easy. All right. Last quarter, Sunrun reported a revenue of about $722 million, which is up roughly 43%. If you guys remember from our previous video, there is electricity shortage in this country, and the per kilowatt hour per household is going up, right? And so, listen, Sunrun is still operating at a scale in a world where electricity costs, battery storage, and grid pressure really matter, okay? So really all Sunrun really needs to do is to just keep proving out the model, okay? Generating cash and, just keep doing what they're doing, okay? And so, as again, per kilowatt hour charges keep going up, they should be more profitable by time and time again. But the interest rates are not helping them at all. All right. So Run again, is the best out of our fundamentals dumpster dive. Um, you know, not the cleanest, but none of these are. Okay, but it's got a real blend of a real business valuation and rebound potential. So there we are on Sunrun. Let's just take a quick look at the chart. Okay, this is the pandemic peak there, bam, and this is where we are in a nice and tight channel here. And I think Sunrun could be a 10x story. Okay, I really do believe so. All right, so that is Sunrun. Next up on our list is Rivian. All right. All right. Here's what I like about Rivian. I mean, number one, did you guys see those Amazon trucks out there? I mean, duh. All right, so out of the Benjamin Graham rating, we gave it 2 stars, a solid 2 stars, okay? And Rivian was once the premium, EV dream. Wall Street saw it as the anti-Tesla or potential Tesla killer with its electric trucks, SUVs, Amazon vans, outdoor culture. At the top, Rivian was priced like it could become the great EV of the next decade. Then the EV market got tougher. Rates rose, consumers got more price sensitive, production was actually more expensive, and the losses kind of mounted. Okay. And Wall Street stopped rewarding companies that were burning too much cash, right? Critics say Rivian has still yet to proven that it could scale profitably. The question is cash burn, right? The margins and whether, Rivian can really pull it together to get it to the next level. Last quarter, Rivian saw $1.3 billion in revenue, up 11% year over year, with $119 million of gross profit. Okay, but the company still posted a $416 million net loss and negative free cash flow of about $1.1 billion. Ouch. So what are these guys really doing right? Well, they still have some brand heat. Again, I see those Rivian Amazon trucks everywhere. So if Amazon's still using them, I think these guys are still have a chance here. What they need to do, they just need some more revenue, I think, and find out some way to plug up the hole with the cash burn. Okay. And as long as they could keep improving their margin year over year and they could, still finance their debt, I mean, they may win this war of attrition. But again, cash burn, liquidity issues could mount up, right? And so Rivian is not clean. Again, 2 out of 4 stars for a reason. So, let's take a quick look at the chart. Okay, for Rivian. Exactly, right? I mean, yeah, this thing is not going anywhere anytime soon. So, again, maybe we need a real breakthrough here. Again, we're looking at a monthly chart all time. Yeah, and Rivian is a snoozer. But, I mean, it's not going up. It's not going down. It's not a bad thing. All right. Next up on the list is Peloton. Y'all remember Peloton from the pandemic? Okay. 2 out of 4 stars in our, fundamentals metric. And, Peloton was the pandemic king, right? Alongside Zoom and Myrna. You guys remember those days, right? Okay. Brooklyn Traders really seen its heyday during that time, right? Wall Street believed the gym had moved into the living room forever. Peloton was not treated like a bike company. It was treated like a elite fitness platform for the future. A lifestyle brand, a subscription brand. Then the world reopened and people just went back to the gyms. Demand slowed, inventory became an issue, and growth was just demolished. Critics say the company was overbuilt, overestimated, and still has a shrinking subscriber problem. But I will tell you this, right? The people that I know that use the Peloton, they swear by it, they love it, they do it every morning. So Peloton does have a pretty sizable cult following, right? And that really matters for a subscription business, right? So Peloton made 631 million last quarter with 26 million in profit. Free cash flow was up 59% to 151 million. But subscribers did fall to about 2.66 million. So, I mean, they still got some profit. They are cutting costs, improving cash flow, protecting the brand. And to me, as long as they could hold on to the subscribers they have and then figure out a way to just get some more, this may be the turnaround story that Peloton may potentially need. Peloton is what we would consider a fallen angel, but, maybe they may rise and rise again. Let's look at the Peloton chart. Oof. Ooh. Right? From a high of 171 to $5. Oof. Ugh. I mean, guys, again, we're not calling it dumpster diving for no reason, right? Oof. Right? But, guys, again, I mean, is the stock down? Yes. Is the stock out? Maybe, maybe not. Guys, we're not calling it dumpster diving for no reason. Okay. All right. Next up on the list is going to be a surprise to some, but maybe not many. Lucid. Okay. I just want to say this, right? So I saw a Timothy Chalamet commercial with Lucid. Okay. I do see Lucid cars on the road. And I'm not going to lie. In my opinion, in my humble opinion, these Lucid cars for an EV has monstrous curb appeal. They are some attractive looking cars. Okay. And so I don't know what's up with Lucid. I mean, if I didn't look at the fundamentals, I would just think they were doing something right. You don't see a ton of these cars on the road, but when you see one, it really is a showstopper. These cars look good. Okay. So Lucid was supposed to be a luxury EV masterpiece, right? Wall Street expected premium design, technology, Saudi backing. I mean, it was and seemed to be a very high-end luxury EV vehicle. But then, it just never really was, right? Something happened with the execution of their plan, right? The cars are beautiful, but the companies are struggling with scale, not as much demand, production inconsistency, and significant cash burn is a very serious problem with Lucid here. So far, we've got 1 star on the Benjamin Graham rating for fundamentals. Okay, Lucid reported Q1 revenue of $282 million, pretty light, far below expectations of $440 million. Ouch. So you had supplier issues here. Issues with deliveries. The company only produced 5,500 cars, but then delivered only 3,093. I don't even know what that's about. So, what are they doing right? I mean, it's a prestige play, Again, it has great curb appeal, right? So if they could get out more cars, it's great. But then sometimes demand is an issue here. What do they need to do? Lucid needs to turn their very beautiful vehicles into a reliable production schedule, reliable deliveries. And then that could be met with some actual, real life demand, They need to reduce their cash burn, right? They need to stop resetting guidance and prove their business model a little bit better, right? So Lucid is not Again, not the best in terms of the fundamentals, right? It's probably the worst we've seen so far. Um, it definitely has a lot of upside potential. Beautiful car, kind of dangerous stock. Not gonna hold you, okay? So, hopefully, the ambitions could live up to the hype one day, right? Let's look at the Lucid chart, and this won't be a surprise to many. Oh, my goodness. Uh, yeah, looks like they had some reverse splits here. I don't ever recall Lucid being $648. So without even looking, I'm just gonna assume that's a reverse split there. And yeah, we made all time lows literally last week. Mm, mm, mm. That's an ugly chart, bro. Not gonna hold you. All right, so that is Lucid. Next up on this list is Plug. All right. All right. Maybe they need to do like an activation with the Migos. Plug. All right. For all you Migos fans out there. All right. So, what's going on here? I mean, 98% decline, right? Yeah. 1 star on the Benjamin Graham fundamental scale. Plug Power was one of the great clean energy stocks that Wall Street was ecstatic about. Wall Street believed hydrogen could become a major industrial fuel, and Plug was supposed to be one of the big platforms. Fuel cells, green hydrogen, storage, logistics, it was supposed to have it all. Then the economics became exposed. Hydrogen took much longer than expected. Costs were through the roof. Margins were bad. Cash burn became a problem, and the market realized that this great energy transition was kind of a dud. I mean, I forgot the name of the other company. Remember the other hydrogen company that was just, it was just like a truck on wheels. That was the joke. Anyway, yeah, critics say that Plug overpromised, underdelivered, diluted shareholders. That's true, and failed to prove the model at scale. I did see a few weeks ago they came out with some kind of deal. I have no time to look it up today, but there was some kind of deal announced. I got to check it out. Maybe I could put it in later. So Plug had about $710 million in sales last year. Q4 actually showed some gross profit of 5.5 million. Okay, that's 2.4% of sales. And hey, listen, you gotta crawl before you walk before you run before you fly. And so, yeah, I mean, we're starting to see little sparks of light here. And so, what are they doing right? Well, I mean, energy is a big issue coming into this side of the millennium, and so you know anything that could kind of help this significant potential energy insecurity of the future will be good. I mean, AI needs a tremendous amount of power. I mean, is hydrogen the thing? No idea, right? So what does Plug need to do? Again, it needs to prove that hydrogen could be as reliable as, electricity or potentially gas. Okay. Needs to improve its margins, need to improve or cut its cash burn, stop diluting its shareholders. That was a huge problem with AMC. Told you AMC is dead, and it's still dead. Got a lot of hate for that, but it's true. Plug is still a very speculative play, and yeah, they need to kind of prove out this hydrogen model, right? But until then, Plug may be a little bit too volatile. Let's take a look at the stock chart. Again, a lot of these guys look the same, but yeah. Yeah, I think it was this day, right? So Plug went from 148 to 471. Yeah, there was news there. I do see a weekly squeeze fired off here on Plug. Price target $4.50. What a snoozer. Listen, again, as you can see levels on a lot of these charts. Guys, I tracked a lot of these charts during the pandemic, right? And yeah, I mean, again, one thing you can notice, right? These things are basing out, right? And so this is what you want to see. You want to see something basing out. I mean, I think by far the worst chart we looked at was, Lucid, because it hit a fresh low pretty much last week market close. But, let's see what could happen. All right. So that is plug. Next up on the list is my personal favorite, and everyone knows who's been a member of Brooklyn Traders for a while, Tilray. Out of my entire portfolio, this has been my biggest call out that just never materialized. Plug is at all-time lows, constantly burning a hole in my portfolio. It's been my personal worst performing play, and Tilray just let me down. Well, one of my stock mentors, John Carter, says that the marijuana market is some of the most manipulated markets in the entire world, right? But according to the fundamentals, we got to follow it, team. 1 star on the Gram score. Again, Tilray was once, one of the great cannabis stocks, right? I mean, Wall Street thought legalization would create a massive amount of consumer demand. I mean, I think there was reported that there are more people smoking Chiba than they are smoking tobacco, which is good, right? But yeah, I mean, man, Tilray is diversifying. I mean, they are getting into the alcohol market, which is pretty interesting. I think they're one of like the top 5 craft makers of craft beer in the whole United States. So that's interesting, right? Some cross pollination there. But legalization is moving slow across the country. There's an abundance of supply of legal and illegal product. Competition is brutal. Again, I've seen people literally go from a legal model back to an illegal model because of the high taxes and the high cost to participate, right? Regulations is messy. Still no, I mean, there was federal reclassification. I guess it's kind of working its way to full decriminalization, but then, I don't think the banking is sorted out federally either, and so, I mean, it's too policy dependent. That's the problem with a lot of these cannabis plays, right? But let's look under the hood, as Ken Blanks Harrell said. What's up, Ken? Third quarter, $206 million, up 11% over a year. Gross profit $55 million, EBITDA $10.7 million, and adjusted net income of $2.4 million. So, hey, they are mildly profitable, right? Not by a lot, but something. Okay, so what are they doing right? Again, revenue still needs to grow. They need to diversify their market a little bit. They do have the beverage. They're trying to get into wellness. And so this is really policy dependent, right? And so Tilray has to prove it can build a more profitable consumer model, even without that legalization miracle. They need better margins and just a strong either policy independence, or something just needs to happen in Washington here. Tilray, we have to consider it more of a lotto play because it's just, again, one of our top picks, but it's just too out there, right? Again, I'm afraid to even look at the charts. I already know what the charts look like, and it's not going to be good. Yeah. I mean, it's like every single time they've done so many reverse splits. It's just crazy. All-time low there. I mean, every time they just, reverse split the stock, it just gets shorted into infinity, right? And so, yeah. This is one that kind of hurt. All right? But it is what it is. You got to take the good with the bad. All right? We still got plenty of great call-outs here at Brooklyn Traders. All right? Next on the list, and I believe our last play, is going to be Beyond Meat, which is beyond out of control. I'm just playing. Again, 1 star on the Benjamin Graham score. Beyond Meat was supposed to be the future of food. I mean, Wall Street believed that plant-based meat could disrupt beef, chicken, fast food, grocery stores, and global protein. At its zenith, Beyond traded you know, like a Ferrari tech stock, Then consumers pushed back. I mean, I remember people telling me it was too salty, it tasted funny. Then the prices were pretty high, weak repeat business, questions about the actual healthiness of the plant-based meat. And yeah, I mean, Beyond Meat reported last quarter, Q1 2026, a paltry $58.2 million, which is down 15.3% year over year. Gross margin did improve. They narrowed their net loss from 28.5 million to 28.5 million from 61.1 million a year earlier. But I mean, again, just with fundamentals like this, I mean, purely a lotto play here. What do they need? I mean, Beyond Meat needs some sales. I mean, they need to pump up some real beef into that plant-based sales channel, right? I mean, geez. Because, I mean, the cost of production is still pretty high. And, again, repeat business is not great. I mean, guys, listen, I like Beyond Meat. If it was cheaper than beef, I would eat it. But it's just about the same price or just under, right? And so why not just go for the real thing? Okay. Yeah. Beyond is the purest of all the dumpster dives on this list. It's a complete lotto. The numbers are ugly. The stock is so hurt. I mean, they just need to swap everything out. Just get rid of everybody, front office, back office. I shouldn't say that. I'm not trying to get anybody fired, but geez, this company just need help. All right. Again, I'm afraid to look at the charts. I already kind of know what they look like, but ooh, 83 cents. Oh my goodness. Whew. I mean, every time you think it's gonna flatten out, it just takes another leg down. Look at that. If you guys wanted to look at some ugly charts, here it is. Some of you are probably wondering, why is this guy even making this list? Because, guys, I believe that a couple of these names on the list, maybe not 5, maybe more like 2 or 3. I think something on this list could do something, right? And so, again, I would go for the ones that look a little bit better, but there we are. All right, so yeah, let's just get our final thoughts, our final word here. Again, guys, we did not call it the dumpster dive for no reason, right? I mean, again, some of these names, they're just ugly. That's it. They're just ugly, right? Let me just kind of fix this here. Oh man, oofe. All right. Again, closing remarks. So, yeah, out of all this list, Run is the best fundamental dumpster dive. Rivian is second best. Peloton, more good than bad. Okay, Lucid, kind of dicey. Not gonna lie, So if I had to pick, top 3 would be Run, Rivian, Peloton. I mean, Lucid. I listen. I think Lucid could do something. Plug. I feel like we need like we need like Elon Musk would plug. I mean, I would even settle for. Oh no, I don't want to say his name. I don't want to say his name. Potentially get canceled. But yeah, Plug needs some help. I think Plug is the true coin toss. Listen, Tilray is making money, but beyond, it's beyond belief, right? And so, guys, again, Brooklyn traders, this is our dumpster diver list, and yeah, these stocks may have lost some value, right? But some of these may be worth the risk. Again, this is Charles from Brooklyn Traders. Thanks for tuning in. I almost said Brooklyn Braiders. All right, take care, y'all.